GKFX Prime presents the Market Analysis
Hello
Webinar.
everybody, welcome to another weekly webinar. Well, it was another blockbuster week for the US dollar last week, sitting around 20-year highs in the dollar index and in dollar yen. As we head into the new week, some opportunities potentially emerging in oil, which is testing the top of a triangle pattern, gold and silver, which are breaking down, but also testing major supports, and potential more opportunities in the euro and the pound as they trend heavily lower. Also Bitcoin seeing a big gap lower over the weekend in line with the week close on Wall Street. The correlation between Bitcoin and the NASDAQ has got very strong. So weak sentiment in the stock market causing a sell-off in Bitcoin as well. So we'll talk about all of that and more. Please let me know if you have any questions, drop a comment in the video. Otherwise, just click that like button, click the thumbs up, and that means we can spread the word about these videos and keep them going. All right, everyone, let's start with the Forex market. Let's have a look at Euro. It's a pretty clear downtrend in the Euro. We've not actually added to it as of last week's webinar. So you can see that we've just almost every day tested the lows down here. This is our daily candlestick chart. You know, I zoom in and I can look at these candles. Almost except this, one bullish day, we just hugged that support every single day. And if we're going to assume that we move in line with the bearish trend, it's a fair assumption that we will take out this support, and testing it this many times obviously shows some sort of resilience from the bulls. There is some sort of buying taking place here. And after a big down move like we saw, we broke out of this major range. And I would expect the breakdown to continue to lower levels. But it's 105 is the big level right now. And I wouldn't, in the near term, what's the most likely price action after a big drop like that is a consolidation. Now, we've had that for a week. It's not clear whether that consolidation goes on for a few more days. And whether we can actually test the top of the range. I would suggest we probably will. We had one. Why isn't that going up? There we go. So if we assume this is something like our range, right? We've come up to the top of the range once. We wouldn't be surprised to see a probe lower or just a probe to the top side, which fails and eventually leads to our next leg lower. So some sort of probe out the top of the range that comes up into some sort of short-term supply area up here and fails and heads lower. That would be an interesting opportunity. It'd be in line with the larger trend, but it would also be at better price levels because right now we're obviously down near the bottom of the range. If we don't see such a scenario with prices moving, well in excess of 106 and, possibly probing up towards 107, if we don't see something like that, and the prices just break straight lower because we have had a week of consolidation already. At that point, the best we can hope for is a slightly better price level in a bounce after the break lower to then assume that prices continue down in the lower trend. And obviously, I've scrolled the axis down here a little bit on the vertical axis, and we should note that parity between the euro and the dollar is just down here. Obviously 100. That's where the euro is equal to the US dollar, which is pretty crazy, but that does seem like probably the highest probability scenario right now, given the trend that we've seen. So let's look out for that. That would be a big event when it happens. For the time being, we're consolidating in the euro. I've not even dropped down to the 4-hour time frame yet, just talk about our kind of trading levels. But the point would be just to kind of re-emphasize what I've already been saying here, is that this is our kind of range we've been dealing with. You could argue the range kind of extended a bit with that. We had a false breakout, moved back into the range, couldn't break again. So maybe we've done as best as we can here. We've already had the false breakout, but the support's been holding well. So maybe we get that breakdown scenario that I talked about, or potentially we can get another move to the top side. And this was the kind of supply area here that we tested. Maybe we can get up to this next one where you can see we're making lower lows and taking out the lows. Maybe this zone up here, which is pretty much at the 107 level, maybe that's what could happen. We could get a break to the top side towards 107 and then eventually turn lower. At the moment, as I say, we're in the middle of the range. Not a lot to be said, other than the fact that, as I previously said, we had that first high, couldn't get up to it, but did hold the support. False breakout lower. Did have this move, which was quite positive, because given the false breakout, but then we've touched the top of the range. So this is kind of pretty bearish information. These two candles, this was a bit more on the bullish side, and now we're testing the support again. So testing the support on a very short term, this support's worked well, but this is going to be the 1, 2, 3, you could say 4, 5, 6, 7th potential test of this support. It's normally around the 5th touch that a support and resistance level will give way. So rising probability that this level at 104.70 gives way in line with this broader trend. Well, I probably over-talked that, which was a pretty simple scenario, to be honest. It was just a rectangle sideways pattern after a long downtrend. Similar situation here in the pound. Let me take it from a slightly different angle. This is the weekly candlestick chart. And just look at where we were, was that we'd had a big bullish trend that had taken out some major resistance. And then we were trending lower in a fairly choppy sort of downtrend, which we sort of assumed to be maybe a falling wedge, maybe just a channel of some kind. It was kind of choppy and slow. And we thought that, somewhere, if not here, then maybe down here, that was it. We were going to test the bottom channel line and eventually break out to the top side. Well, we didn't think that, but we were aware that this was just a retracement of this. Now, as of the last few weeks, story looking a bit different here. There was still a possibility of a 50% retracement and a bounce. No sign of that. You can see we stopped the week at the 50%. Then we slammed down the following week, got below the 61.8 and then closed above it, but absolutely very minimal bounce the following week and slammed down here. And, if we are looking at Fibonacci levels, the next one is the 76.4. And interestingly, that does tie up pretty well with this low down here. So maybe if there is a Fibonacci that's going to eventually work, it could be that 76.4. But at this point, it almost doesn't matter if they work, because we're no longer really trading on the basis this is a retracement. This is just a fully fledged downtrend in itself. We're not thinking about this move so much as a retracement of this move anymore. But we're obviously already oversold on a weekly basis. That kind of thing can't sustain on for a particularly long time. So we're probably close to a low here. We can't keep going down this fast, as I say. So 76.4 potential downside target, but that's just on the long-term basis. Let's look what's going on a shorter-term basis. Here's our daily chart. It looks a bit scrappy, to be honest. Apologies for that. Let's look at the 4 hours a bit cleaner. So a bit like the euro, where we had that horizontal range, but the pound has already broken down through it. We made a low, made a little false breakout, but now we have actually traded below it. And at the moment, this is just classic downtrend stuff, where we made a move lower, consolidated, and then beginning the next move lower. Now, if we can hold on to this little spike low and actually make it through the high here, the high comes in 123.75. So if we kind of make a little tiny double bottom here, and then we close even on an intraday basis above here, then there's scope for a bigger bounce, and what could end up being a better sell opportunity later on is maybe up through these lows here. So if we can't sustain, if this little bounce was not enough, and we kind of put in a short-term double bottom, whether you've got to kind of, if you're willing to go counter trend, there's a buy opportunity right down here at the lows, And then there's a potential sell opportunity once the market has come out of these, come out of this sell-off with a bigger retracement somewhere near that 61.8% retracement level, interestingly, and this series of support here on the short term, and the 50 SMA. Maybe that's where the bounce could start stalling on a second occasion and roll lower. No particular reason at this moment to be really looking for any kind of durable buy opportunities. A potential one of just testing the low here, but there's not a lot to go off. We've just had a reversal and we've ticked back down towards it. You really are throwing caution to the wind if you're buying at the lows here, but obviously the risk to reward could be potentially quite decent. If you're buying right at the low and maybe you're targeting these lows through here, my inclination would just be to see if that happens and then just wait for an opportunity to sell with a trend later on. Right, dollar yen, let's start with this daily chart. Just wanted to point out this this rising trend line connecting the lows. and dollar yen, it is one where I'm a bit more mindful of, I'm a bit more open to the idea of selling this market, which is counter trend. Even though we've obviously had a major breakout, let's remind ourselves of the situation. This is our monthly candlestick chart. So we're up at levels last seen since 2002, obviously the 20-year high, right? 2022 this year. But, this market looking very overextended. You can see the last time it was this overextended, it saw a huge drop. So we don't necessarily need to see a huge drop, but you can see even from these initial overbought levels, we get a big kind of down month from these highs. And I think we're probably due a down month. So we're in May, and we've made it through the first week, and we're up pressing into the highs again. But this is the weekly chart. You can see how massively overbought we are, and this is our rising trend line on the daily chart. And on the daily chart, as I pointed out last week, we've got some bearish divergence. That bearish divergence has in a way extended because we're now testing the highs. But you can see that we're not testing the highs in momentum in the RSI. We're barely even making it back over the 70 level. So if we started to tick down from 131, especially if there was some sort of reversal candlestick pattern on the daily chart in combination with this bearish divergence, I'd be pretty keen to go for that, and especially if it then got confirmed with a breakdown through the rising trend line. I think you've got a few things lining up to support a deeper dip, and then a downside target to me seems fairly straightforward in that, we do have this low if you're going to be a bit conservative about it, but this is our major level that we broke, which is basically 126. Going back to that monthly chart, that's the 126 is basically that high from 2015. So even if we're going to come back, we've broken out, right, and we come back and test the high at 126. We're at 131 now, so coming down to 136 would be 500 pips. So that's not an outrageous idea, given how overbought and diverging we are. And that we're kind of struggling to make much progress above 131, which is obviously just 100 pips above the big 130 level. And 126 is obviously that's the old high, and that's just 100 pips above 125, which is the kind of next round number down. So maybe we don't even make it to the next round number down. Maybe we stall at 126, which is the old high. So potential pullback opportunity here. Like I was saying with cable is obviously right at the low, dollar yen is right at the high. Makes sense, right? Both talking about the dollar here. There's scope in both these markets. I would argue better one in dollar yen for going counter trend, and maybe that little counter trend move, if you don't want to do it, sets up a better move in line with the trend, a dip to better prices in line with the trend later. All right. So anyway, great trending markets in Forex, which is great. Let's move on to metals. Pretty kind of choppy looking markets in metals, to be honest. This is our weekly chart. This is how I'm framing things in terms of gold. We've put in the double top. We had broken that downsloping trend line, and now we're coming down towards a retest of that downsloping trend line, which fits in with the 50-week SMA, which is a sort of pretty soft kind of support, but gives you a bit of an idea. It worked well after these previous trending periods. So when the market is actually trending, here it wasn't trending, so okay, it didn't really work very well. That's the story of moving averages, right? Held here, held here, held here, then we faded at the high, and then it broke, and then that's what opened up the kind of sideways period as, afterward broken down and closed below the 50-week moving average. So decent support from the moving average, a possible retest of the trend line coming up as we pull back from that test of record highs. So from this perspective, gold's still looking okay, but it's obviously in a downtrend on a kind of short and medium term basis. We had talked about this rising channel last week, and I basically said, I think I've said for the last couple of weeks that we could be on for something like this. And, we've almost done it, right? So if we actually were to test the downsloping trend line, that would almost be a pretty neat, perfect symmetry of an A, B, C. And who knows, there might be more downside to come after that, but for the time being, that might be some sort of downside target. That's around 1815. So we broke down through that flag pattern. There's the kind of multiple areas of support here. Tested it held it as resistance. Here's the support here. We took out the support and came down, and then we just about held on to this previous resistance down here. Came up, tested the support as resistance. Did make it through it, but only on an intraday basis, and now we're failing on rolling over again. So bearish characteristics on the daily chart, and then from our kind of trading perspective, we're down here on the 4-hour chart, and you can sort of see that as we start the new week, we're kind of rolling over, right? We had made that new high, now we're coming down, making new lows, breaking down from what was a brief recovery shown by that rising trend line. So turning bearish again on the very short time frames, just the most bearish on this time frame. And then on a weekly basis, maybe we've got some support to eye up down here if those short-term downtrends continue, as we think they might. As you can imagine, not a dissimilar picture on silver. We've got it looks like the market's angling for a test of this big support. And you've got to imagine at this point, there's probably a lot of stop losses stacked underneath 22, not 22, where it was the support, 2150. That 2150 has been supporting silver since September 2020. Last time we were above there was July 2020, below rather. So pushing into kind of support that's been sitting around for close to 2 years. So to me, it would make sense that we have a flush down through there, take out some stop losses. Obviously, it's not, that's kind of the mindset of big institutional players, right? If you are going to buy silver, you may as well push the price down to where everyone cuts out and sells to you, and then you can buy it up again. So this is like big institutional logic, right? So that seems like where we're headed. Obviously, we've not been able to make it through this resistance at 25.30. That was the support, false breakout, and then we had the new high up here, 26-ish, false breakout, took out the support down here. You could see it better on the daily chart. Weren't able to sustain the breakout of this peak, and then these peaks are all over the place. This was the thing that finally gave way weren't able to break out there, rolled over, took out the support, tried to rally off the support here, lasted for about 1, 2, 3 days. Then we put in this kind of bearish engulfing on the daily chart, and we're, that bearish engulfing, that probably implies that we're coming down to test the lows at 2150-ish. Do we take them out? I mean, I think we probably do take out support, and then I would just be looking to try and trade in line with the big boys who might be trying to buy up on that, using those sell orders to buy in, and we might see a false breakout of the support. Otherwise, if we see a real breakout, then obviously that's very bearish for silver. Pretty much opens up a new downtrend. Moving on to the oil market, as I mentioned, a bit of a kind of triangle pattern here. We closed just above it at the end of last week on a daily basis. Now we're ticking lower from it today, so it could end up being a false breakout. Looks decent enough. Depends how you draw this top trend line. You could potentially draw it through here, in which case we're just kind of testing the trend line, the resistance, which has already been broken. The momentum seems to be in our favor. You can see it's sort of curving. Was lower, now it's sort of higher. So it seems like we've kind of put in a base in momentum, and now we're kind of challenging these former peaks. So it looks like oil is trying to break to the top side, and that is, it has kind of, however you draw this pattern, it does seem like it's broken to the top side of this kind of triangle, and there's just a bit of interim resistance there, and it's going to continue its move higher, having broken this triangle pattern. That's what it seems like. If that's the way that we can probably tell that's not the case, is there's quite a decent trend line up through the lows here. If we come down here again, it might be a buying opportunity at the trend line, because we've already kind of been down these levels here on a kind of quick intraday basis. So another quick drop to 105 could be a buying opportunity at better prices, given that we're kind of topping out here, a bit of a double top going on at 110. 110's a round number, so keep in mind there will be some big sellers coming in at 110. It's just a matter of whether they get overpowered or not by the buyers. And so double top at 110, drop back to 105, potential opportunity. But if we take out this rising trend line, that's when we can turn a bit more bearish and assume that this breakout above this resistance, above this triangle, is not happening, and it's a false breakout, and we can turn bearish at that point. At the moment, the bias is that this triangle breakout holds, and we push to the top side. Moving on to the S&P, this has obviously been, in terms of stock markets, this has been the dramatic one. We talked about it, I think, for the last few weeks, at least the last couple, with the left shoulder, head, right shoulder, potentially dropping down underneath this head and shoulders pattern, which would almost guarantee, it would imply a drop down towards the 200-week moving average, something we last saw during the COVID drop. So it looks like a pretty bearish pattern happening here, but bear in mind these kinds of head and shoulders patterns can actually turn out to be quite bullish if you get a breakdown through the neckline, but then you close up above the neckline again, invalidating the bearish pattern, and everyone who'd gone short has to cover and buy, and all the buying, more people jump in and buy, and actually it becomes a bullish pattern, a bullish continuation pattern. So a failed head and shoulders reversal pattern, where the price drops under the neckline, which at the moment is basically 4100, but then moves back over the neckline again. That actually can be one of the best bullish patterns. So I will certainly be looking out for that as an opportunity to buy. Right now, the market looks very soft and I don't really want to be buying, but I'll look for that false breakout. And otherwise, I'm just generally looking for the break of this neckline and for more bearish action. But remember, we have been 5 weeks in a row down. which doesn't tend to happen very often in the stock market. You've had 5 weeks down on the trot. So maybe, as I say, the 6th week, a little false break lower and then a close up. That would actually fall into line quite logically, that actually people buy in on the 6th week of losses, and it proves to be a kind of bullish signal around that neckline. So let's see if that plays out. That'd be interesting. If we close the week low and we close below the neckline, well, let's just assume that the pattern is working and assume and start working on the basis that we're going to have that move lower and below the 20-week moving average. So I barely need to go into the lower time frames on this chart because our whole basis is that weekly chart and that topping pattern. But obviously, to kind of pick out your trades, to pick out your timing, it's good to look at the lower time frames. We're holding the support at the moment, and you can see that this was the previous support where we managed to rally up. The resistance held 3 times. So if we do get a bounce, then it can be back to this same area again, which has worked a few times, 4,150. And if we clear 4,150, there hasn't been much resistance before we get back up to 4,300. So 4,300 again. If we do get up there, then obviously the market's going to be quite bullish, and there's a chance we break it. But it would be a good opportunity to sell down if we've just held the neckline for we held it once and then we hold it for a second time and rally up to the same level. That's not to say it's held forever. We could still give way at 4,300. More selling could come in and eventually break below that big neckline that we're talking about. So a few scenarios here, but a lot of it centers around 4,100. That's really a massive level for the S&P 500. Right, I mentioned there was a gap lower. This is a short time frame level. It has taken us down to below 34,000. This gap lower, this weekend gap in Bitcoin. Here's the big picture. The big double top. Just not really been able to make any meaningful rally since the decline down from the test of the old highs. All the rallies have been really pretty pathetic. Now we're just in this trading range. No one quite knows what's going to happen next. But obviously we're testing support now for the first time since the start of the year. Yeah, late January was the last time we got down to these levels, coming down to test 33,000. And as I've mentioned on multiple occasions, I think if we do break below 33,000. That means we come down and test this major support from the first drop back that we had, which is 28,500. So having a look a bit closer on the daily time frame here before we wrap things up. Here you can see there's that low. We're testing it perfectly. So if you think this range holds, then obviously we've got a bit of a buy opportunity here. And as I mentioned, the S&P 500 testing its neckline, Bitcoin testing the bottom of its range, right? So the two are correlated pretty well. So if you do have trades in the S&P or even the NASDAQ, which is more extreme, and Bitcoin, you're kind of taking the same trade at the moment. Okay. Whereas if you do have a long in Bitcoin and a short in the S&P or the other way around, then actually you're kind of hedging yourself to some degree. So bear in mind these correlations when they're this obvious. And this is just the we had the lower lows. We had this kind of triangle pattern in Bitcoin here, and obviously we broke down from it. And we made a low, and then we barely bounced, and we gapped down through that. That was the low, consolidated above it, and then we obviously just gapped straight through it, right? And now we're down at the current level. So bearish in Bitcoin at a major level, but no real evidence yet that the level's going to hold. And given that we consolidated for a long time, not far above this big level, my inclination is to think that it gives way. Maybe temporarily, like the stock market, but let's see. Big levels coming up this week, guys. Big trading opportunities, should be interesting. Good luck trading this week. See you the same time next week.